We're seeing some early signs of a possible slowing or contraction of the economy currently. These signs are slowing employment growth, slowing growth in GDP, so that's the overall size of the economy, and also the inverted yield curve. And an inverted yield curve occurs when longer term interest rates, the rate at which the government borrows longer term, dip below short-term interest rates. That's usually a sign that people don't want to borrow as much money, that people aren't seeking credit in order to expand businesses and so on. And it's a kind of a precursor sometimes of a recession or a contraction. So a recession would have quite a few effects across the economy. There could be an increase in unemployment. For those who keep jobs, there'd be a lower wage growth. We'll also see potentially slower asset price growth, for example, slower housing price growth, or even stagnant house prices. The stock market and other asset markets probably be stagnant. There's a lot of pressure around the world that's driving these kind of recessionary kind of issues. We're seeing trade wars. Trade it creates a lot of uncertainty, slows down the ability of manufacturers to invest and make plans if there's uncertainty about tariffs and so on. There's also a great deal of weakness in Europe. The European economy has struggled consistently even since 2008, and they're just struggling with growth. And then there's uncertainty about some significant factors like Brexit is also creating a lot of uncertainty in the global economy. In the 2008 recession, we had a slowdown, but we also had a confounding problem, which was basically the collapse of the mortgage market. And that led to the failure of a good number of banks, which then basically dried up all of the availability of credit to households and also to companies. We're not seeing that problem as much now. The banking system is much more stable. We're not seeing that kind of bigger threat. So I think that a recession or slowdown would be probably weaker, probably less dramatic than in 2008.